Thank you very much. I'm very honored to be here, and it's a pleasure to participate to this discussion today. Let's say that with respect to the first session, now we will look at the global context, let's say, and what I would like to do in the next 10 minutes or so is to have a short description of the de facto reserve system before 2007-2008. I will look mainly at the period after 2000 and before the crisis, the role of the emerging markets and the US current account deficits. I will then point the attention to the what we call risk-taking chains. I will explain this in further details. And then the crisis, and in particular the materialization of the risk. And then we'll look a little bit at the future and what are the perspective for the next decade. And I think that if we want to have an idea what will happen, is the first question we have to ask is what's the future path of reserve accumulation? Meaning, will China keep accumulating reserves, China and other emerging markets? And then I will move to the possible scenarios for the international monetary system and in particular the currency reserve. And we will have a Eurostar. Let's start with the global monetary system before 2008. Let's say that the main element is the dollar dominance. I think that there is no doubt here. Dollars was used as a store of value, so large part of international reserves are held in dollars. I think that if you look at the IMF data on currency composition of the reserves, looking at the countries which provide this kind of information, more than 60% is held in dollar, and the dollar is also a unit of account, a means of payment. Most of trade transactions and financial transactions are in dollar. In this context, the role of the euro is secondary until now. Euro is important in the Europe neighborhood, but at the international level we have definitely a dollar dominance. Now, the years between 2002, let's say, and 2007 have been characterized by large accumulation of risk. Now, I will explain this point later on, but the two elements contributing to the accumulation of risk are the extraordinary savings of emerging markets, in particular Asian emerging markets, and prolonged US current account deficits. Now, there is quite often we can hear that China was financing US current account deficits. Well, it might be true, but it's not so straightforward, because if we look at the detail, we can see that central banks, for instance, People's Bank of China, invest in safe, liquid, and short-term assets. I will show you some data on this. While if you look at the US households, they borrowed, so they offered assets which were risky, illiquid, and long-term, mainly mortgages. I would like to keep in mind these two elements and to explain why they contribute to the accumulation of risk and then to the crisis. In this table, I'm showing you the foreign portfolio holdings of US securities. These are percentages. You can see that in June 2008, 76% of US Treasury debt held by foreigners was held by foreign official institutions, meaning central banks mainly. In here there is also sovereign wealth funds. And then you have US agency debt. These government-sponsored enterprises mainly. They're not fully guaranteed by the US government, but they're basically they were considered risk-free. So you can see that the share of foreign official institution holdings has been increasing very much during this period. It means, this just to say, to show you numbers about the fact that the central banks are investing in safe liquid assets, which are mainly US debt or US agency debt. This process created a sort of displacement of private investors. What I mean here is that while in 2000 part of US Treasury debt was held by German investors, in 2008 it was mainly People's Bank of China, and German investors were asking for safe liquid assets on the market. So there was a very large increase in the demand for safe liquid assets, while in the market the supply was quite limited. So we have a sort of this mismatch between demand and supply of assets. There is demand for a certain type of assets and supply of different type of assets. So what the US financial sector did is transformed risky US mortgages into safe liquid assets. And this was done through securitization, ABS kind of products. Well, this transformation is such that the financial sector had to take on an enormous risk. And this risk was hidden, it was there, it was in the shadow banking system. Okay? And partially was transferred to saving surplus country like Germany, for instance. As I mentioned before, there was very strong demand for safe liquid assets. And these the products of securitization were sold like liquid safe assets with a certain, and providing a good return. The crisis exploded when the risk materialized, and meaning when the bust of the US housing market occurred. I think that this is a particular aspect of the global imbalances story, but I think that is very crucial to understand what happened, and also it will help us to explain the role of the US dollar during this period and even more after the crisis. This picture should help us to have an idea of the amounts which are involved in this story and why we experience such a deep crisis. You see that here you have US current account deficit. This is accumulated over time. So you have the amount of 7,000 billions. And let's say that this is broad measure of supply of risky assets. And then this is only emerging markets reserves. So it's a big group of countries, and you see that they have been growing a lot. So you have a broad idea of the mismatch of the demand and supply of assets.